Imagine becoming a millionaire without picking stocks, without being a financial expert, and without earning six figures at a job you hate. In fact, many millionaires built their wealth using something incredibly boring. Not crypto, not day trading, not chasing the next hot stock, just the S&P 500. Today, I'll show you exactly how it quietly turns ordinary investors into millionaires. What is the S&P 500? It's an index that tracks around 500 of the largest companies in the United States. These include companies like Meta, Apple, Microsoft, Amazon, Nvidia, Google, and many others. Instead of trying to pick the winning companies yourself, the S&P 500 gives you a piece of all of them. Think of it like owning a small slice of the entire US economy. When the biggest companies grow, your investment grows with them. Why it's so powerful? Historically, the S&P 500 has returned about 10% per year, on average, over the long term. That may not sound exciting, but the real magic comes from something called compound growth. Compound growth is when your money earns returns, and then those returns also start earning their own returns over time. Instead of growing in a straight line, your investment grows faster and faster. Over long periods, this creates powerful exponential growth, even from small starting amounts. At first, it feels slow, but after many years, the curve begins to rise dramatically. The quiet millionaire strategy. Let's look at a simple example. Imagine someone invests $500 per month into an S&P 500 index fund. They don't try to time the market. They don't chase trends. They simply invest consistently. At an average yearly return of 10%, after 30 years, their investment could grow to roughly $1 million. Not because they were lucky, but because they were consistent. This is exactly how many everyday investors quietly build wealth. Why most people miss this? Ironically, the strategy that works best is often ignored. Why? Because it's boring. People want excitement. They want the next Tesla, the next Bitcoin, the next overnight success story. But chasing hype often leads to poor decisions and emotional investing. Meanwhile, the patient investor quietly buying the S&P 500 every month keeps building wealth in the background. What does the GOAT think? Warren Buffett has repeatedly said that most people should simply invest in a low-cost S&P 500 index fund. In fact, he once made a bet that a simple S&P 500 fund would outperform professional hedge fund managers over time, and he won that bet. The lesson? Even professionals struggle to beat the market consistently. They might sound smart on TV, but most of them underperform the S&P 500 over the long term. The 3 simple rules. If you want to use this strategy, the approach is surprisingly simple. Invest consistently. Invest a set amount every month, regardless of what the market is doing. This is called dollar cost averaging. I use Vanguard. They have extremely low fees. Think long term. The S&P 500 will go through crashes and downturns, but historically, over long periods, it has continued to grow. Stay invested. One of the biggest mistakes investors make is panic selling during market drops. The people who build wealth are usually the ones who stay invested through the ups and downs. The real secret: time. The biggest advantage you can give yourself isn't picking the perfect stock. It's starting early, because time allows compound growth to work its magic. Even small investments can grow into significant wealth if given enough time. That's why the S&P 500 quietly creates millionaires. Not overnight, but steadily, year after year. So if you're trying to build wealth, remember this. You don't need to outsmart the market. You don't need to chase trends. Sometimes the smartest strategy is the simplest one. Invest consistently. Stay patient, and let time do the work. Because while everyone else gets impatient and is chasing the next big thing, the S&P 500 is quietly building millionaires. Thanks for watching. If you enjoyed this video and want more money tips and company earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I personally own an S&P 500 index fund. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.